What's up guys and welcome to Wall Street Millennial. Today we're going to be looking at some of the biggest gains and losses on the Wallstreetbets forum over the past week. By looking at what they did and how their trades played out, we can learn from other people's successes and failures. First off, we have the user Maybe Yes Maybe, who posted some loss point of his portfolio down 51% or $22,000 over the past week. He made these losses on Tesla and AMD earnings plays. On January 26th, Tesla reported earnings results that beat on revenue but slightly missed earnings per share estimates. The company gave an upbeat guidance for 2021 as they expect deliveries to continue increasing as their gigafactories come online. However, after Tesla's 600% gain over the past year, expectations were high and this slight earnings miss caused a 10% pullback in share price. AMD reported on the same day as Tesla and also suffered a roughly 10% decline in the subsequent two trading sessions. Earnings actually beat estimates as revenues grew 45% in 2020 on strong demand in the PC and gaming console end markets. However, AMD stock suffered a similar problem to Tesla. Shares have already increased 75% over the past year, so investor expectations were very elevated. This makes the stock vulnerable to a pullback even when they report strong numbers. While the OP picked good companies to YOLO into, profits were not guaranteed because the timeframe was so short and short-term expectations were so high. This ultimately cost the OP a $22,000 loss. Despite this loss, the OP has no intention on throwing in the towel on his YOLOs. He lives by the motto cardboard or Lambo. He wants to YOLO all of his money such that the only two potential outcomes are becoming homeless or having enough to buy a Lamborghini. We wish you luck on your future YOLOs. Next we have user Red T-shirt with a more than 100% gain on AMC. AMC is up nearly 600% in the past month due to the short squeeze, most recently up around 4% on February 1st. This Robinhood user got in at a cost basis of $7.28, which means he either bought the dip on January 28th or bought some before the initial squeeze and bought more at a higher price to bring the average cost basis up. Thursday, several retail brokers famously banned trading of Gamestop and other highly shorted names, including AMC. This artificially wiping out buyers in the market obviously pushed the stock price down, which would have provided a buying opportunity for anyone who wanted to buy the stock. However, it also brings into question whether or not the OP could have actually bought a significant number of shares on this day, since it appears he was using Robinhood. The OP also brings up an interesting point, and that is the possibility of exercising long options on Robinhood. Options on Robinhood are of the American kind, which means that you can exercise them at any time up to the expiry date. European options, on the other hand, can only be exercised at the expiry date. Early exercise for calls is almost never optimal because the value of an option is always greater than or equal to the intrinsic value, and if you exercise early, you automatically lose all of the time value of an option. Therefore, it is theoretically always better to sell the option rather than to exercise early. For this reason, it is well studied in financial mathematics that the value of an American call is equal to the value of a European call, even though the American call can only give you more optionality than the European call. It is not clear why the OP was interested in exercising options. In any case, whatever he did seemed to work out, and he is now $12,000 richer as a result. Congratulations. Next off, we have user FancyHAnime, who posted a screenshot of the sea of red that is his portfolio. He was in almost all of the Wallstreetbets meme stocks that benefited from the GameStop short squeeze. GameStop stock pulled back as much as 25% on February 1st, cooling off after a historic short squeeze and rally. This pullback comes as short interest in the stock has decreased dramatically to 39% from its highs of more than 100% mid-January, according to market data firm IHS Markit. 39% is still a high short interest by conventional standards, as most stocks have a sub 5% short interest. But investors sold out of GameStop shares today as they fear the relatively modest short interest of 39% decreases the probability that the stock will squeeze higher in the future. He also owned shares in other short squeeze beneficiaries, including Tootsie Roll Industries and Canadian marijuana company Cannabix Technologies. The only stock he owned that was in the green at the time of making this post was movie theater chain AMC, which bucked the trend and is actually up. While it never feels good to see so much red on your portfolio screen, most of the losses are just a couple of percentage points and he has no intention of selling, saying you don't lose if you don't sell. Good luck on the diamond hands. Next off, we have user iClipCrip, who is another casualty of GameStop's 27% pullback on February 1st. He loaded up on 4 365 strike calls expiring on February 5th with a total cost basis of $58,620. At current prices, his calls are more than 50% out of the money. With the expiry being just 4 days away, his position has decreased in value by $46,000, or almost 80%. He seeks advice from his fellow Wall Street Bets degenerates as to whether he should cut his losses or diamond hand until expiry on Friday. Unsurprisingly, the comments overwhelmingly support diamond hands, with user Lanake Resident saying he is also down significantly on his position but is not concerned at all. User Maleficent Ad 560 says he plans to hold for another 2 or 3 more days as he is close to the moon and he can smell the ozone layer. User Azure Blob says you're only down if you sell. While you could make this case for a long-term stock investment, the OP did an options YOLO, so if GameStop closes below 365 on Friday, he will lose everything whether or not he sells. After such a massive run-up in a stock, it usually seems like a prudent idea to take at least some profits. But this is a unique circumstance where refusing to sell could push shares higher as hedge funds are forced to cover. The GameStop saga has turned into an all-out game of 4D chess between Wall Street Bets and the hedge funds. Wall Street Bets has been successful so far, but with short interest declining, time is running out. GameStop shares are in uncharted territory, and in this volatile time, it's more important than ever to manage the risk in your portfolio and make sure you are not YOLOing your food or rent money. What do you all think about GameStop stock? Let us know in the comment section below. Next up, we have user Meme Trader, who posted a screenshot of a friend's account up $42,000, or 331% on GameStop. This trader held 237 shares of GameStop at an average cost basis of $53.79. At this cost basis, they probably got in around January 21st or 22nd, significantly before the peak of the short squeeze. In fact, this was around the time when Andrew Left put out his video on YouTube saying why he thinks GameStop will go to $20 a share. However, instead of falling for that short-selling fund manager's tricks, this Wall Street Bets user's friend proceeded to buy $15,000 worth of stock and was handsomely rewarded for it. Commenter IceTech3 and Gorilla190 say that they wish they had mentors to help teach them how to make these kinds of trades and the gains that come with them. They bring up a good point that experience in trading stock and options is important in order to manage risk and maximize returns. But just staying in tune with the Wall Street Bets subreddit and the trading/investing community in general will also be enough to help you spot these types of opportunities. For example, GameStop short squeeze happened over the course of several trading days and spanned multiple weeks. For anyone who had been reading Wall Street Bets, the growing hype around GameStop combined with the high short interest, which was maintained throughout the whole time, should have been enough for people to see what was going to happen. Alright guys, that wraps it up for this video. If you like the content, make sure to hit the like button and subscribe so you don't miss future videos. Also check out our second channel, WSM Research, where we post in-depth research videos on trending stocks that could end up being the next 10 baggers. We cover a mix of stocks that are trending on the internet as well as high-growth investment opportunities such as Amazon and Tesla. This way, you get the best of both worlds in finding high-growth tech stocks while also keeping up to date on which stocks might become hyped up into the next meme stocks. In the meantime, be sure to follow us on TikTok, link in the description below. As always, thank you guys so much for watching. Wall Street Millennial, signing out.